everyone. This is Otsukimi. Who else would it be? This is Observations with Otsu. Glad you're here. We have a lot to discuss today. I've been a little short on my normal videos that I post on YouTube and on X. I think I'm going to start posting these videos on X as well. The thing is, these videos can be an hour long, so just keep that in mind. I'm happy to do it, but just watching an hour video on X or Twitter is a little cumbersome, I know. So for today, we're going to do a little bit different. I think we're going to do a little more market focused, less themes, but we'll incorporate some themes as well. So what I've got for today is, I've mentioned this already on X, that I'm going to focus on the charts as usual. We're going to cover Bitcoin, Ethereum, Solana. I think we'll probably cover Bitcoin, Ethereum. I don't really like covering that pair. I've expressed my disinterest in the ETH BTC pair because I don't really think ETH is as much of a heavyweight as it used to be, and I think Solana kind of is going to possibly replace Ethereum as that heavyweight. I don't think it's going to eclipse Ethereum in market cap, but I think the potential. But I think we should be putting our eyes focused on Solana. So we'll get into that as well. And a lot of you premium members in my group, you guys know what I'm talking about. I've got a members only video that's going to focus on how to onboard your money on the Solana ecosystem, wallets, exchanges, things like that. And so a lot of people don't know, and it's actually really easy. So we'll check that out. So that's going to be the market part of the aspect of this video. But we're also going to talk about, speaking of members, we're going to talk about the premium member launch. We're going to talk about that probably in the front part of this video. And then we're also going to talk about the corrective moves that we're seeing on the markets. Last week, I did an observations with Otsu video that said, hey, are we going parabolic? And I said, no, not so fast. That was the name of the theme, was parabolic, not so fast. And so now you can see that we have done that, and like you can see here on Ethereum, this is just an open chart with my apex indicator. We are going through a series of lows, and so that's something that I want people to be mindful of, because we're not seeing an extended parabolic run. We are seeing more of a musical chairs type run, which I talked about in my Discord yesterday, and that's a sign of things being more corrective. People are looking for opportunities on a case-by-case basis instead of a market-wide basis, which means that we are going to head into a corrective move, and if we're not careful, that will lead into a distributive move, and that would mean price goes down. So corrective means price goes down a little bit, distributive means price goes down a lot, and we don't want to do that, right? My overall emphasis has been, I think that we are going to see a corrective move for the next 2 weeks, possibly 3. And I think we might see a small pump kind of midweek December, and I think we're actually going to coast until New Year's. I don't think this year is going to be as explosive as people think they are. I think we might see some post Christmas price action. That's good, but I think most of the bullish reserve, the potential is going to be reserved for January, February, and then the rest of it will be preserved after the halving. All that makes sense combined with all the stuff that we got going on. I'm not prescribing as a Bitcoin halving narrative person. I don't necessarily prescribe to that narrative, although I do agree with it. I don't lead with that, right? That's not something that I do for my trading strategies. But it does seem to correlate well with the current conditions that we have. The market looks very good, and it looks a little too good in my opinion. And I know I'll get a lot of hate for that, but I've been I've been on the bull side since January. Okay, I have bought real low. I don't want to get into that like I always do, but the market has been in an uptrend. So if we go into, this is just the intro, but as I've mentioned before, if you go to the daily here, and I got my indicator on this, but we have been in an uptrend since this entire year. Okay, there's nothing that's range bound about this necessarily, unless you incorporate May of 2022 to October 2023. That would be considered range bound, kind of. I mean, you have this that we flipped here, but this is all range bound. But technically, we've been in an uptrend for this whole year, and you could be in a range and an uptrend at the same time. Technically, it just depends on the perspective. But overall, we've been trending for some time. I just think that we're going to cool off a little bit, and that's if you're offended by that, I do apologize. But that's also coming from someone that has played the markets from a trend bound perspective all year long, and so I'm looking at it from a different perspective. As much as you want things to go up or want things to go down or whatever which way you want to, we got to look at what the market will do versus what we wanted to do. And that's exactly why people didn't make money for most of this year, because they're focused on what they want the markets to do versus what it is doing. So we'll get into that. That's much more of a longer discussion, but we'll talk about that. And then also, I want to talk about shifting our perspectives. This kind of goes into the previous point, but I want to talk about how we should shift our technical analysis to focus on trends instead of market ranges. And so the thing with this is the market is entering a new cycle, and at least in my opinion, I'll explain why I think so. But also that's going to lend itself to more trend-based moves. And I've thought about this for years. Okay, like I've been in this space for 6 years. I've been in legacy markets for eight, almost nine. And so one thing that always seems to come up for me is what's the best way to trade? Like as far as foundationally, like what's my overview way to trade? What's my default? Now obviously it's Aroon if you guys have seen my content, right? But also, um, it's also I've learned is like there's a time when markets are trendy and there's a time when markets are not trendy. And I've learned over time with risk assets like Bitcoin and really any market, even the S&P, there is a trend, and that's why a lot of people tell you, you know, just to buy indexes for 30 years, 40 years, because it's going to just go up. And so that's the stipulation, right? That's always the assumption that things will go up, and I don't necessarily agree with that. However, I do agree with the fact that there are trends. Things will trend. S&P has been trending upwards for pretty much its entire lifetime, and so we go to the S&P and we zoom out. This indicator is not built for S&P necessarily, by the way. But if we zoom out, you can see a pretty good trend even from 2002 and onward, right? And so that's kind of what I mentioned. Things have trended up for pretty much every asset, or just trending. And so anyway, the foundation for that is I think it's time to focus on that again. Focus on the fact that we should be trending. And that's why I don't prescribe towards the regular crypto trader, because a lot of people just see the market, they want to buy, sell, whatever they see for the day. I don't view it that way. I view it from a higher, not higher perspective, but a different context, a larger context. Is like what does today mean in the span of this month of November? What does this month mean in the span of 2023? What does 2023 mean in the span of the next cycle? So we'll get into that. And obviously, I think the cycle is here. I think the new cycle is here. I think we've entered a hope stage, and therefore it is time to focus on trends, and spot and things like that. But we'll get into that as well. So anyway, that's the introduction. I apologize, a little long. I'm gonna get into a small theme area. I may skip that and just I think I'll do just a small discussion next. But I'm also going to talk about my premium member Discord. We're going to talk about that. We launched yesterday. I'm going to show a few things about that. Share the features, share the links, indicators, get into that. And so let's just get forward with this, with the introduction. Get this long introduction over with. We'll get started. All right, so some small preliminaries today. I'm going to keep it really short. This is actually going to be part of the theme for this video as well, so hopefully that means even shorter video. But I've finally launched Knowhere Premium. It is a premium only service. It is a paid service. Right now it's $20 with, and if you sign up by the end of this year, I'm going to extend it to the end of the year. You keep that locked in price. And so that's very cheap. That's as cheap as I'm pretty much allowed to do it with the time that I'm given. After the end of this year, it's going to go up to about $30 a month. So just keep that in mind. If you sign up now, you retain that $20 price point. Okay. And I will have future services and other things to try to get you back to that $20 price with if you sign up for other things like my trading bots, things like that. I got a lot of stuff coming out. And so, but right now, the Knowhere HQ Premium has launched. We've launched several channels and discussions about that. We've already um, traded about three different trades because we got the trading portfolio, as you can see on the screen. We're also going to have premium charts that explains different positions, the why, the criteria and all that stuff to kind of give you a slice of education along with those charts. And then small caps. We've already discussed three small caps in the past 24 hours. And we also have discussed focusing on things like Solana, and I that's one reason I talked about that already is because I do think there's a lot of untapped potential with Solana right now. And when I first joined, the first cycle when I was here, there was just Ethereum. I mean, there were L2s, but they weren't like insanely popular. They kind of were, and I remember making a lot of money off of those. But the next cycle was really where DeFi kind of settled in, right? And so DeFi coins were the thing, and then NFTs were the last, the third cycle, which was the last one, and other things like Solana. So I think Solana has matured enough to where I think we need to start paying attention to what's on the chain itself. And so anyway, that's most of that. The how, the coin selection, even NFTs, those are all going to be for premium members, and that in and of itself, that one subject is going to be well worth the $20 fee, and then you can sign up. I got multi-month plans as well. You can leave whenever you want to. There's a 7-day free trial as well, and so you got that going on. And so I'm also getting daily video updates. I unintentionally was misleading by that. That's actually a Monday through Friday update or Sunday through Thursday, so not 7 days a week. It's 5 days a week. But I meant to say market days as far as regular finance trading is concerned, like Wall Street type hours. So that's kind of what I mean by that. But we've launched already. It's going pretty well. I'm going to leave a link in the description below. It's also here on the top right hand screen that you can check that out. There's also scripts. There's indicators. Other things going on. I'm launching a full fleet of things, and I got two more things coming up in December. I'm going to have Aroon trading bots. Those are going to be more like if you just want trading bots with, some of them are going to have entries and stops. Some of them are just going to have entries, different coins, different things. And if you want premium and the bots, I'm going to put them together, and you get a small discount with that as well. And then so that's December. In January, I'm launching Apex Academy 2024. So it's my newest year of Apex Academy, where it's going to be an 8-week masterclass instead of the typical 12 weeks. I've consolidated to make it easier to understand and also be flexible for those that can't always be on Discord every day. And so we're going to run with that as well. So I hope it's not overwhelming. I know I've been a little overwhelming with plugging all my services, but it's been a long time coming. I've done some of these as much as 4 years ago, finally launching this. But anyway, so my indicators and my indicators are already published. The top three. Knowhere Premium has just launched this week in November. Aroon bots are coming in December. Apex Academy is coming in January. So I'm gonna have a full set right there, ready to go. And so anyway, I hope a lot of this has been a result of my followers coming to me asking about things, and I'm able to reciprocate this in this way. So let me know what you think. Please sign up, even if you only sign up for the free trial. Like I know how this works, right? Like I have a marketing business at home, or not. I have a marketing business outside the crypto world, so I know how this goes, right? You know how this goes. Some of this is marketing tactics, so I'm being transparent about that. I don't really care in a sense, and I'm not here to say, oh, I want you to get in here and lock you. Like that's not the point. Like just sign up for the free trial. If you don't like it, you can cancel. And so some people have even signed up and then immediately cancel, and then you get your 7 free days. Like just sign up and enjoy those 7 free days. Like I urge you to get free stuff. Okay, it's completely fine to me. You can't multiple sign up things like that, but you know, take advantage of the free stuff that I'm willing to give out. Right. So, and if you like it, please stay. It means a lot to me that I get supported by things like this. That's the main draw for me, is because I'm just a regular dude that grew up in the Midwest in the United States, and I just trade, okay, and I have traded effectively, but that's not the point. The point is like it's humbling to know that people appreciate what I have to say, and so your support means a lot to me. Your support also means that I'm able to post more on Twitter for free, and Discord for free, and Telegram for free. So a lot of the paid people, they get extra things, but it also helps everybody as well. So, and I really appreciate that. I really do. And so I've had pretty much every interaction I've had in this way. People have really appreciated it. I tend to try to be more. I try to get the highest ratio of quality and value as well, so that way you appreciate it as well. But anyway, that's that's the preliminaries for the premium. Sign up, please, if you want to support me. Sign up for the free trial, especially so you can get just 7 free days and you learn something, and you can scoot if you want. It's completely fine. So, anyway, that's Knowhere Premium. That's the preliminaries. Now we're going to get into the meat of the analysis, starting with Bitcoin. All right. So first things first, I'm going to talk about Bitcoin on the 1 week. And in addition to this, I'm going to talk about the shift of technical analysis moving into like a trend perspective. And so this is kind of a culmination based theme from the last 3 videos or so that I've done. And so I don't really count this as a theme per se. I'm just kind of revisiting some previous themes from previous videos, and I can link those if you want as well. But the emphasis here is that we have changed the nature of the markets, and so I kind of want to go into that just very briefly before I get into the TA, but we'll cover that all in one section. So overall, as you guys know by now, and if you don't want to listen to this, you can skip ahead a couple minutes. But the general idea is, all right, we've had this distributive method back in 2021. This was a very large 3 week bear divergence, so that played into the nature of the downward trend that we had last cycle. And so this is what this looks like. We started in May, and then it actually started to trigger in about November of 2021. So that's been 2 years ago, honestly, since we've done that. So it's been a long time, but that was the beginning of the downward cycle. And so I mentioned this to say some people um, did not consider this distributive, and some people stayed in. Were willing to accept the losses, thinking that we were still in a bull market, things like that. Other people were cautious, like me, and I sold. Okay, and so I did not necessarily think that we were going into a bear market, but my interpretation was, all right, we have a big bear divergence. This is a concern to me. It has to play out. And so my technical analysis is always like divergences will play out. They will. So they will either play out in its full force or they will get invalidated. And so in this case, they did play it in full force. But that's the second category. The third one is like everybody thinks that, the third group of people is like, all right, this is corrective, distributive. We're going to go down immediately. In this case, they would have been right, but that's typically also the smallest group of people. So why do I say all this? I say all this because technically in October of 2021, that was the market top of the cycle. Okay. But most people did not think that that was the top. And so this goes into part of the theme where cycles, we tend to view cycles in hindsight. And I think for the most part that's okay. There's nothing necessarily wrong with that. The problem is we don't play them in hindsight either. We play them in our foresight. So if you think this was a top, like the amount of people that actually thought that was a top back in the day was very small. And so as a result, most people did not sell. And I did for the most part. But I also, part of that was also just being fortunate. So the reason I emphasize that now is because we also had this emphasis on the 2 week on the bottom, and that's something that I've talked about before, but I won't mention really in this video. But all this being said, now we're looking at a new structure here where we have expanded past the range. And so, if you ask me, This structure right here, back in January 2021, about 31,000, 32,000. You can connect that as a liquidity area to the current price action that we faced this summer and or the middle of this year, and we broke above that right now. So now this means we have a new market structure to deal with. Okay, and so we are not at the top from 65,000. We're not at the bottom from 15 to 20,000. We are currently at 37,400. And so what this means is that we have broken market structure. And so for everything that I've just said the past 5 minutes, you can condense that out to say, or condense that to say, we have broken market structure for the past 3 years. And so now we are starting to move more into a trend based market. And so that is why I bring all of this up, is because we need to focus. Like, I shouldn't say we need to. I can't guarantee anything, but my intuition tells me that you'll likely benefit more by focusing on trend based movements rather than range based movements. Okay. And so this is one reason I posted my video from about 2 weeks ago, called Trading Bullish Price Action. And there's 7 ways that I mentioned how to trade bullish price action, because that is going to help you probably. Because the more that we trend, the more you're going to have to play more trend bound. Because when you see something like this, and so, middle October we were at 26,000. Okay, middle of November we're at 36, 37,000. So we went up $10,000 Bitcoin. So for every one Bitcoin you hold, you've gained $10,000 in the past month. Okay, and so the thing with trend bound is that we are not guaranteed to have your normal trading rules apply. So that means you're not going to get as many pullbacks. You're not going to get as much fading attempts. You're not going to be able to get retests to buy. Okay, dips will behave differently. Structures will behave differently. Trend lines will behave differently, and so that's the thing. And so that's why I mentioned all that, because if you don't normally trade trend-based moves, you are going to have a harder time. This is going to be an uphill battle for you, and that's one reason a lot of people get left hanging, so to speak, or left without a bag at all, because they don't trade the way that the market favors that trading capability. And so that's why I never really prescribe to range bound trading, is because range bound is very temporary in the same way that bear market trading is temporary. A lot of people love to trade, like bears love to trade more than bulls generally. As far as, like, I think everybody likes bull trading, but if you've noticed, one thing that a lot of bear traders have in common is they love it. Okay, they love the blood, so to speak. And so I don't view it that way. I don't like to see that. I'm okay shorting, but there's a lot of problems with that. Bear trading has limited downside, and it's temporary in nature. Just like range bound trading is also temporary in nature, and it assumes a lot. It assumes that the range will always stay a range. Well, if a range always stayed a range, then you could just play a range forever, and that would be too easy. And so that's kind of how you should view it. I think the more we we progress, I really do think that next year is going to be a very trending market. This year we've traded, was it like 100% already? Let me check here. Roughly here, let's just go all the way to the bottom to roughly right around here. So 140% we've traded. I was just talking to somebody yesterday that hasn't bought Bitcoin. I tell him almost every 3 months to buy Bitcoin, and he missed out on 139% this year. If you play it out to just you know January 1st, like literally 126%. I mean, so even if you want to play it conservative, 120%. You That's so hard to get on an entire portfolio in the legacy markets, but that's something that we easily get here. And so, and also want to emphasize, if you have not gained 120% of your portfolio, you should trade only Bitcoin. So that's just something to keep in mind. So that's just the general idea, like to emphasize trend uh, based trading versus range bound. I again, the emphasis is to focus on the trend. So let's go ahead and go to the weekly. Kind of want to mention that in the perspective of everything I just said. So I'm going to keep this support structure up, but we had a bounce through, and so one thing I also want to keep in mind. So I added the 200 EMA on here, and this is something that I've focused on before. So I longed this. I think I sold it, but then I longed this again, and so I bought around this structure here. I bought again right here, and that kind of went underwater for some time, and then I bought a third time. But what I want you to know is that we don't cross the 200 EMA very often. Again, this goes into trend based trading. Not sure why it's not showing up on here. I guess it doesn't show up right away on that. So let's go back to the one. No, let's just go over here. I got a position I think open. No, it's just not showing. Anyway, let's go back to the 1 week. I want to cover the Binance chart actually. So going through here, going to the 1 week. Well, I'll stay here on the 2 week just a second. So we have the structure here. That's the broke through in June, resistance in July of the following year, and then we broke above that finally. So now we're broken above that. We're at 67 on the RSI, so everything's looking pretty healthy with this. Very wide Aroon bearish consolidation. Nothing really to be concerned about just yet. We just need to make a new high, and then that's good to go. But what that means is if we don't close a new high in the next 13 days, then we're going to face some more downside. But I mean, the high is really, really close. So just keep. I mean, we're only a couple percent away from the high, so just keep that in mind. I think it's going to be okay for now. But that's the 2 week. 2 weeks looking pretty healthy. Let's go back to the 1 week. And so what I wanted to mention about the 200 EMA is that was honestly your big trigger, and I was very vocal. I don't want to get onto this, right? But I was very vocal about the divergence from last October, but I was also very vocal about the 200 EMA, and because both of those you don't get opportunities like that again. You don't. Okay, once those happen, usually once or twice a cycle. And so once they occur, it is like the easy mode to get in. And so we can see that that was the case. Yes, we did have some consolidation for the next 4 months, but that was also a good opportunity to continue to try to get in, knowing that hey, this structure is holding and it's worth jumping into. So anyway, that's what we see with that. So currently we have a current bullish candle here, but we also had really the past 4 or 5 candles have been, and I think I emphasized on the last video that this has not happened for some time. I believe I believe the last time that happened was right here in the middle of the top cycle from 2021. So um, that's worth bearing in mind. Another thing that's worth bearing in mind is we are approaching my personal oversold area of 80%. A lot of people do 70. I personally do 80. Um, and you can see right here is if we put this marker up here, which I've already got a dotted line here. We don't visit above it very often. In fact, on the Binance chart, we've only visited above it in 2 other areas. And so this could mean that we continue to go down. It could be something like this where we have this structure here, but it may not be. So that's just something to keep in mind overall is that although I don't necessarily trade according to the RSI like this, I think it is worth keeping in mind once we start to get oversold divergences. And that could take some time. I mean, and that doesn't necessarily mean it's a top either because the top of the RSI at 94 was right here at 38,000, basically where we're at right now, and we went almost double that. So that doesn't necessarily mean something bad's going to happen, but we could also distribute like this. So we'll see how that plays out. But right now, we are matching levels from pre-COVID about summer of 2019. So we could see a downward move. That is completely possible. But so far, things look pretty healthy overall. And so I want to emphasize again, going to the trend part. Like, don't get too consumed about day-to-day, hour-to-hour price action because it could drastically change. And keep in mind that the perspective for the weekly looks really good and really trendy. And so we also have the same consolidation here as the 2 week, although this isn't as strong. It's still pretty significant. And so if this closes without a new high, I think that's going to start giving us some more consolidation to the downside. And that's kind of what I'm looking at as well. In addition to this, we also have this structure like so, with your breaker. So this is kind of the middle of the move. If we can't break above this by the weekly, I think that we do get some more downward price action for, I'd say, for at least 2 weeks. But we'll see how that goes. But overall, to get a high conviction with that, we need to go below 36,200. And so overall, this is why we're getting confusing things. Like a lot of people are very bullish right here, and I would say a lot of I'd say the mainstream. I don't want to say mainstream. The main consensus on Twitter, crypto Twitter, is that um, the main consensus on crypto Twitter is more bullish than I am. I'm not as bullish as probably the average person right now on CT. And so the one reason is because I have made a lot of profits already this year, but also we are seeing some corrective actions. There are some signs that we are weakening in our structure, not weakening, but being more elastic, and so that typically lends itself to reversion and correction. And so we'll see how that goes. I still think buying the dip is the best scenario, and we'll see how that plays out. I'm just kind of monitoring the charts as we go. We're gonna zoom in to the 1 day and kind of see the structure as well. I've mapped this out before where we kind of have like an expanding triangle, and I really hate that term because it's kind of like one of those basic terms you see on like the intro, on them Instagram type photos, right, where you just see people posting bull patterns just to get engagement, right? And so that's I don't want to mention that per se, but that's something that we are seeing right now, and that we are kind of expanding. So a few things I want to mention. First of all, we have a divergence in play, and so as I've mentioned before in other videos, the previous part of this divergence has played out. The second one did not. In fact, it's even going. We're even getting another high with another low. So this is a sign that the strength is not there. Okay, that's the whole point of divergences, right? Is that the price action or the strength does not justify the price action. And so that is a clear cut number one, and I teach this in the academy. The number one sign of weakness is divergences. Okay, now that weakness does not always be weaknesses are not always equal to downward price action. So I want to keep that in mind. But divergences are a prime example of weakness, and those are examples that you can see right in front of the screen that are crystal clear. Okay, and that's why I emphasize divergences so much, because they are very obvious examples. Okay, and I don't want anybody to lecture me on what's obvious or not obvious, because okay, if you can criticize me focusing on the obvious all day. I don't care. As long as your portfolio shows it to me. Show me that what you're doing is more profitable. I'm not saying, I'm not talking about profitability. It's not where I'm going with that. So I didn't mean to go there. But the point is, if you found a way to make more money, then show me your portfolio. Um, because at the end of the day, you want things to be as easy as possible. Why complicate things like I say this all the time. Why complicate things more than they should be? Life is already hard, okay? Especially if you have a family. Like life is going to be hard. You got things to do, places to go, money to spend, everything else. And so make this easier on you. The crypto markets are so much easier to trade, in my opinion. And you can make more money in these markets, but you can also lose more money in these markets. So don't make it more complicated than it should be, knowing that you probably have more money to lose than you would normally would. So just keep that in perspective. But as far as the daily goes, it's still looking pretty good. I mentioned on Twitter that we are holding the 37 marker, and we're still holding it right now. If we can hold 37 37,000, I think 37.2 is what I mentioned, then we should be able to keep going. Ideally, I would like to see a new local high, which is not far away, about 38,000. If I do that, then I'm looking at what I call a Darvis box, and so that's kind of where I target right here at the highs, and then put my target under the lows. And then a lot of, somebody mentioned today that they remembered my target is 47,000, and so that's what that would look like. I'd probably add extra risk to that as well, because not only are things more trendy, but things are going to be more expansive. So I personally would be using more risk to compensate with that. And plus, again, that goes back to my early entries. I can afford to have more risk because I got in under 20,000. So I'm just playing that out, right? So that's the perspective that I see on the daily. So let's go ahead and go to Ethereum, and then we'll just keep going. All right, so I'm gonna talk about ETH right now, and one thing I want to mention also, I guess more along the lines of, I guess I'll save it for Solana, um, towards the end of the video, but I'm gonna cover why I think there's some weakness consolidation in the markets. But we'll cover Ethereum first. It's very clean, honestly. We had a bearish week for the first time, in about 4 to 5 weeks, and so that does kind of correlate to what I will say in Solana is that we are seeing some corrective moves, and I do think it's a little arrogant of us to assume that we won't get any bearish candles. Like we've gone 5 weeks now, without a bearish candle on Bitcoin, going on six. So I really want to emphasize that, is that the market will correct. It doesn't have to correct all the way, but it will correct some. And to be honest, we should not be offended by these type of words. And I don't want to, like, I almost don't even want to apologize for it, because that's just how the market works. You're going to have trends, you're going to have sub trends. And that's kind of what Aroon does. It has its own sub trends. So, like, the top line is the trend, the bottom line is the sub trend. That's the easiest way to describe it. And it works so well. It works so much in harmony that way, right? So, like, here is the the market is bullish, but then we also have a bearish subtrend. That's why we got a bearish down move, and then we had a bullish trend after that, is because the market is always going to have a subtrend. And so that's also the main aspect of, like, wave theories. From what I've heard, I'm not a wave theory person myself, but that's also the same emphasis behind that. And so that just really helps. Now, with Ethereum, this pertains because we do have an actual a confirmation of the bearish consolidation that we don't have in other assets like Bitcoin, and probably with the market in general. But this is actually confirmed. Now I'm looking to stay within. So I got some cars running down the street. I'm think within this triangle is where I'm looking at, and we could stay. I doubt we'll stay as long as September, to be honest with you. But this is pretty sluggish, honestly. This should be doing better than what it is doing, and I'm not convinced that Ethereum is going to run like a lot of people think that they will. I think it will run, but again, this is why I'll mention it more in Solana, but that's why I think Solana is going to have, it's guaranteed going to have a better R&R. I can say that it's probably certain. Most of you that have gotten in under 20 are have already 2 to 3x by now, where for Ethereum to do that, you're going to need, even if you got in at 1500, let's say, now you're going to have about 45 $100, which is basically its all-time high, or its local, generational high. So, like, how high do I think Ethereum is going to get? I don't know. I mean, 10, 15,000 might be good, but we'll see how that plays out. I don't want to speculate per se. But we are still within this range. We're still below the 2140 that I mentioned. We're kind of stuck in this little sub range, but we need to break above that, and I have reason to believe that we will not just yet, because on the daily, which we'll switch to now, is we have this breaker move right here that we had at the beginning of November, and we not only have been fading towards that ever since, we've also kind of doubled at this area, and we also had 3 fade attempts. We're still going down, it's still rejecting, and so this is coming very close to being considered a deviation. And so if that's the case, then I do think that not only are we going to go back to the 1800 range, but we could even go lower, possibly even to 1730. But we'll see how that goes. We're kind of in this weird limbo area, and Ethereum has been doing this all year, and so that's why I have not focused as much on Ethereum because there's no real good price opportunities here. Not like Bitcoin, not like Solana. You guys know in my Discord, I've been a big fan of Bitcoin and Solana all year, and so, and that's the one reason why is because the opportunities are better. I don't care what the name of the coin is. How much money can I make, right? And so that isn't that why we're all here? Who cares what color these are, what their names are, or whatever? Are you going to make money or not? And so Ethereum has been the weakest of the three. It is getting close to deviating below, but we'll see how that goes. The marker for me would honestly be, you know, probably a daily hold below where it's at now, probably 2000 range, but it really needs to be above 2140. I'm not convinced of any longs unless we get that 2140 or unless we break below this 1890 and then we break back above. So, unfortunately, Ethereum is a little pitiful to me versus the other markets. So let's go ahead and go to Solana, and then we'll kind of wrap this up. All right, so let's go to Solana. We're going to cover the weekly first because we have a few things to discuss about this. First of all, we had the bullish run up into new local territory, and that was again the fifth bullish candle in a row. We have no bearish. We do have a bearish consolidation on the Aroon, but no confirmation just yet. It looks like we might get it, although we do have 6 days left to go. We've had a pretty big downtrend today so far, about 7%. You guys know my targets, which I'll get to in a second, which are around the $48 range, and so we'll go into that soon. But I also want to mention as well. I think Binance gives you, but yeah, it does. So one thing I see right here, and one reason I'm looking at the $48 range is because we have just a perfect pivot point here. We had a local top here, broke through resistance, broke back above, and so I have reason to believe that we'll just visit that again. I know that's contradictory to what I said earlier in this video about trend-based markets, but there's a lot of overextension here, and so that's one reason. Like, it kind of matches up because we do have an overextension here on the weekly, and if we only get a few opportunities above that, so it could go higher, and that's completely possible. But for right now, that's kind of the main thesis that I have. So other than that, like, Solana is a very clean chart, by the way, and so I'm really surprised that people had not paid attention to it until very recently. A lot of people were looking at Link, which is completely fine, but Solana was given us like the best R&R as possible. Like, it had even the consolidation period with the trend line to give us this expansion that we were looking for. So overall, that's looking pretty good. I'm pretty confident that we will get to at least all-time high, and I've got no reason to think that will change just because the market's down 7%. So let's go ahead and go to the daily. One reason I think that we're going to go down is we had this kind of C fork. We had a big impulse, but a solid rejection. Retest, so that becomes a deviation. Retest down below. I think the slope, and this, I know this is a little vague, but when I look at trend lines, I look at the percentage slope, and if the percentage slope is just too high, then I do have a high conviction that it's going to go downward. And so one thing I look at with this is, so you can look here, and so your slope here is about 42%. Now, I don't have a particular angle percentage, like, oh well, it barely qualified at 40%, so that means it's going to go down. Like, I don't tend to really think that way, but the more vertical it does go, the more I think that it will go down. And so, I mean, if I had to throw a number out there, I'd probably say like 32 to 30%. So that's kind of like golden ratio type thing, but I don't prescribe to that per se. So the angle in particular is just too high for me, and it's not far away from $48 anyway. I don't think that's a big ask, in my opinion. We do have an Aroon bearish wedge to kind of confirm my thesis that we are going to have a larger down move. That's what wedges tend to do. They have an acceleration of the subtrend, which we have as bearish price action currently. Excuse me. And I also think it could coincide with maybe a 50 RSI bounce, but we'll see how that goes. But overall, I like this a lot. It also goes well with the divergence in play, and that's kind of what I really want to keep emphasizing, that these divergences have an effect. Okay, just because we go up once, and so when we went up on this candle, a lot of people were like, "All right, bulls are back, bulls are back," and that doesn't mean anything. I mean, that's kind of what blow off tops are for example. But when you have a divergence in play, you should always be mindful. You should never, especially you should never buy after a large candle when a divergence is in play, in my opinion, because you get things like these. You get harsh rejections. Now you're down 8% or whatever, or you get liquidated, and that actually fuels more opportunity to be more downward in price action. So just keep that in mind. I'm telling you, I've been here for 3 cycles. Okay, you want to preserve your capital even when the market is hot. Okay, that doesn't mean you don't put yourself to exposure or risk, but I strategize to long or short opportunities when they arise with the mindset that I want to protect my capital. Okay, a good a good defense is a good offense, or I don't know how that goes. But the idea with this is that you protect yourself while you're being exposed to the markets, because you can't make money if you don't have money. That's the thing. So just be mindful of that. Be mindful of your risk and things like that. So anyway, that is Solana. So I hope this video was helpful today. I don't know if it was as long as other videos because it was a little more shorter as far as its analysis, less themes. But I kind of want to summarize to say, like, hey, we are going into a new cycle. We're also going into a new year, and there's a lot of things that are going to be at play. A lot of people are various things. A lot of people are concerned that we don't have enough time anymore, um, before we get to the end of the cycle, which I think we'll probably have a minimum of 9 months to possibly 12 months. So I want to keep that in mind. Like, don't be scared of necessarily, but also at the same time, people were freaking out 2 months ago, and I don't even see the reason why, because the market's been up all year, and so a lot of things have changed, and so I don't want the last thing you need to be is scared or concerned. I have tons of videos that you can look at on my YouTube that explain a lot of things. Go ahead and search through those. I've done multiple videos every week for like the past year, and a lot of those will help you, especially my trading bullish price action video. You can check that out. But don't be discouraged by this. But also don't rush yourself. Be prepared. Set your risks. Play it smart. There's always going to be other trades on the table. And I'm telling you, I've missed some very good trades where I would not be here recording probably because I'd have way too much freaking money to care. Okay, because I've made some easy mistakes, and I'm trying to help you to not make those same mistakes. Okay, so I'm telling you, there's always going to be an opportunity. There's always a way for you to make more money. There's always time for you to learn as well. So just keep that in mind. I hope you have a good day. Let me know what you think. Like, subscribe if you haven't, and sign up for Knowhere Premium if you would like to take advantage of that. And I'll see you next time. Thank you.